Stephanie, kick us off here. If people missed you at the beginning of the week, did you get any pushback, on Fast Money or from viewers on, the quote social media about your picks, Cisco, Prudential, any of them?
No. And in fact, on Expedia, we had a good comments from the CEO yesterday on CNBC, who talked about searches being twice that week over week in the UK since travel restrictions are going to be lifted. And we just heard Wynn's comments as well from the UK saying reservations went from nothing to hundreds. So I think Expedia is a really interesting story. It was a good week for the stock. It's a reopened name. I think the reason I feel so confident in the name is because bookings were up 32% in the second quarter. So that just gives me visibility. Prudential, we talked about mainly fairly new management and kind of shrinking to grow, doing asset sales. And they sold 17% of their variable annuity book last week. That's 3 to 4% accretive. 2.2 billion, and guess what? They announced a real estate joint venture this week. And then Cisco, also a pretty decent week. It's enterprise spend recovery, right? And again, the reason I feel good about it is because the bookings in the quarter were up 41%. Orders in the quarter were up 41%. And I just feel good about them having an analyst day last week and reiterating all of their financial targets. And the stock is trading at a 20% discount. So no, not a lot of pushback, Brian. Kind of excited about that.
Yeah, no, it's all right. It's probably a good thing because we got all the COVID headlines, of course. We just did a story, Vance, about for some reason people are hoarding toilet paper again. I don't understand it, but whatever.
Yeah.
I'm going to Vegas next weekend. I'm going to LA in 3 weeks. Barely could get a seat on a plane. Travel is booming. You got any beef, Vance Howard, with Stephanie's Expedia pick?
I like the trade a lot, man. I really do like it. It's one of my favorites out of the panel that we've got. I think it's going to do wonderful in the last quarter of the year, this year, and I think it's going to do wonderful in 2022. But, I've loved jets. Brian, I've been telling you to buy jets, which is the ETF of all the airline stocks, and, man, it took off yesterday like a rocket, and we're having a lot of fun with that trade. But I think Expedia is a wonderful pick.
Thanks.
Yeah, not like a rocket, Vance, coming off like a jet, perhaps. Anybody, David or Craig? I'll just throw it out there as well. I can't see us, so just kind of just jump in. Do you guys think that maybe not Expedia, but travel in general is a good bet?
We think travel is basically going to come back. The real key is pay attention to valuation because a lot of the stocks have run in advance of business coming back. But we definitely believe the world is normalizing. The consumer wants to get out. So that area of the business is going to do well. And we also like Expedia. And in terms of Stephanie's picks, we love Cisco. We think it's one of the few technology companies that has not rallied nearly as much over the last 12 months. So Stephanie, we're in line with a lot of the same thinking.
Thanks, David.
Brian, I would add into this discussion, Brian, that when you come back and you look at the charts, there's no question that the reopening trade is still a theme that investors are looking to play. And Expedia has had a very nice day over the last couple of days. And you just need a little bit more wood to chop to reverse that longer-term downtrend. And then I think you can have an even stronger move. Same thing with jets. And so the question really comes down to, can we get enough momentum in the reopening trade? And that's probably, Brian, as we looked at some of the names that we brought in, things in the energy patch and also in the basic materials, we're still thinking that the real economy is going to pick up. We're going to get a surge, and we're going to see some of these basic material names really pick up and be strong. And I think that's going to be a new theme going forward in the marketplace.
Yeah, Craig, and we'll stick with you. I want you to comment on one of Vance's picks, and that was Intel. And, semiconductors, obviously, they are hotly traded through the SOX index. They're kind of a leading indicator, supply chain problems, all that stuff. Do you have a point of view? Vance recommended Intel, Craig. Do you have a point of view technically on an Intel or any of the other semiconductor names?
Sure. So first and foremost, I think the semiconductor space looks great. When we go through and we look at our work that we're doing, the relative strength inside of the semiconductors, not only the semiconductors, but also the equipment still remains quite strong. And as I look at the price of Intel and the relative strength of Intel, I think it should also be bought along with the SOX index itself. It's certainly looking very good. Going to be a lot of CapEx coming up with Intel with these new fabs they're going to build in Arizona, but I think it's the right place to be, and I think it's a very constructive looking stock.
Yeah, Stephanie, and Craig was recommending some of the oil names, not all of them, because he sold Pioneer, but he bought Cimarex Energy as well. You know, oil and gas, I'm kind of talking my space, though, for obvious reasons. That has been a hot take. Do you own or would you own any of these smaller mid-cap oil or gas producers, Stephanie?
Yeah, well, I own Diamondback Energy, and I actually added to it last week just on one of those sloppy days because we know we get our chances on these names. I think Cimarex is super interesting, too. It's had a nice run, but it's still very, very cheap. So I think it's an interesting play. I like Diamondback because they have an accelerated $2 billion buyback program that they just announced. They're lowering debt. They're lowering CapEx. They're increasing production. And I think for Craig, I have a question for you. Do you think that we're going to start to see CapEx, because prices are higher, do you actually think that we're going to start to see CapEx actually reverse? If we've seen it decline, which is very disciplined, do you think, though, given the higher prices, we're going to start to see CapEx increase? Because that would be, I think, the death knell for the group.
Right. And Stephanie, what I would say is I think the answer is ultimately yes. I've been very impressed by the capital discipline across the entire energy patch so far. But when you start looking at $4 or $5 nat gas prices and the fact that we are trying to move more toward a green sort of energy production in this country, and nat gas would fit into that in a better way than coal would, I think you will definitely see those productions start to come back.